Hello and welcome to this May 6th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Ford Motor Company, ticker symbol F. This is a $41.6 billion consumer goods company. Stock's really been on a really nice tear throughout the last year or so. It wasn't that long ago we had Ford sitting in front of Congress along with GM, Chrysler, and so forth. And but really over the course of the last year now, we've seen a tremendous pickup not only in the technicals but also the fundamentals of Ford. Now we did put in a double top recently, and now it appears that we're in this sideways consolidation pattern. And so I think until this breaks, what I would do is take a look at this $12.11 area, which is where we broke out in early March. We went back, we tested $12.11 almost immediately the next day, and then continued pushing higher. We came down, didn't quite get to $12.11 in early April, but we did come down, test the 50-day moving average, went back up. We put in the double top at around $14.50, and now we've come all the way back down. Now we have lost the 50-day moving average the last couple of days, closing beneath that key moving average support level, but we have not violated that $12.11 price support area. We did print a long-legged doji on Wednesday where we actually went down intraday all the way to $11.59. It looked like we had a breakdown, and on big volume we reversed back up and actually closed back above that $12.11 area, opening at $12.32, closing at $12.34. Hence, there's your doji on the day. So we had a pretty nice downtrend over a course of maybe 6 or 7 trading days. Had a false breakdown intraday, and then we were able to rally into the close. So I think this could be a short-term turning point for Ford. To the upside, the first thing that Ford's going to have to do is negotiate the 50-day and the 20-day moving averages. Right now the 50 days at 13.17, the 20 days at 13.31. So that's going to be an area of resistance in the near term. If we can break above that level, then we've got a chance to head up to about 13.70 and ultimately the 14.50 area. So those are the areas I'd look above. To the downside, so far we've been holding this $12.11 area on the close, so I'd keep the stop pretty tight here, right at about that $12.11 area. The volume trends, no question, have been turning more negative of late. We've got a MACD that's also threatening to go down below the center line. We did, on a couple of occasions, see that before, back in September and early October, but we did turn back around to the upside. So I'm hopeful at this point that Ford will also turn back up at this point, and the MACD will follow suit. Overall, though, I think this is a good reward to risk trade. If you play the moving averages, you've got probably about 85 cents or so, maybe 83 cents up to the 50-day moving average from where we closed, and you've got 23 cents down to the closing support level at $12.11. So nearly a 4-to-1 reward to risk ratio, which we find particularly attractive here. So again, I like Ford. We'll see how it trades tomorrow. Let's keep an eye on the overall market. The market's certainly had a rough couple of days, and let's see whether or not the overall market can hold on to 50-day moving average support. If it does, I think the chances are pretty good here with Ford. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.